Welcome to the very first session of our special series on Margin Trading Facility. Margin Trading Facility, or MTF, is one of the most powerful yet misunderstood tools in trading. If used properly, MTF can help us take advantage of a lot of market opportunities, but if misused, it can also create many risks for the trader. That's why we are bringing you this new series where we will break down everything about MTF, from the basics to advanced strategies, risk, and also the practical do's and don'ts that you need to take care of. To help us understand these topics, we have with us a SEBI-registered RA, Mr. Neeraj Gogoi. Welcome, Neeraj. Welcome, Neeraj.
Yeah, hi.
Neeraj, let's dive right into the first question. The basic question of what is MTF, what is Margin Trading Facility. Please help us understand this powerful trading tool.
Yeah, the margin trading facility is a SEBI-regulated mechanism which is introduced in India recently. Now, it is somewhat like, financing your purchase of shares through the broker. Okay, it's very much similar to buying a house. Now, when you buy a house or you buy a flat, so what you do is that you finance a part of the cost, and remaining part is financed by the bank. Now, similarly here, when you buy shares, a part is paid by you and remaining part is financed by the broker. Okay. Now, I can give you a simple example. Now, just think about a stock. The price of the stock is 1,000 rupees and you are buying 100 quantity shares. So how much money you have to pay? 1 lakh rupees.
Right.
Now, in case of MTF, just by paying portion of it, for example, say 25%. So by paying 25,000 rupees, you can buy 1 lakh worth of shares. So remaining 75,000 rupees is financed by the broker, and for which you have to pay a interest on it, right? That is, in a very short, sweet and simple way, is what MTF is all about.
Got it. I think this bank example really sort of explains it and simplifies it for us. Thank you for that.
Yes.
Also, can you walk us through, can anyone sort of take this MTF facility? Because if I just take your example in a loan process of buying a house, not everyone can get a loan, right? So what happens in MTF? Can anyone get a loan? Is there eligibility? How does that work?
Exactly. Let's extend a bank loan example, buying a house, right? So each and everyone are not eligible to get a loan to buy a house from the bank. He has to have certain income criteria, right? Nowadays, your credit rating is also very important. Right. Now, similarly here also, in case of MTF, first step, you have to accept the terms and conditions of the broker. You have to opt in. Now, this is a digital process, and you have to digitally sign the terms and conditions, agree to the terms and conditions, and then you are allowed to do it. Now, again, every broker has got certain specific conditions to use the instrument MTF. Now, in a broad way, for example, if you're an NRI, you are not allowed to use MTF. Now, if you're a minor, probably you will not be allowed to use MTF. But yes, these are the broad terms and conditions. First, you have to opt in. You have to accept the terms and conditions. And then finally, your client ID or your user ID is segregated at the back end for the purpose of or tagged as a MTF user.
Got it. Thanks, Neeraj. Now that we understand the eligibility criteria, I also have a question on, how much do I really need to have to get that MTF? Can broker give me any amount of money? How much do I have to pitch in? Is there any limit on how much I can borrow from the broker?
Yes. Now, first of all, I'd like to tell you that approximately 1,500 shares has been, in the list of MTF shares. That is again released by the exchange or the regulators. Now, this list can be changed by the broker. Okay, they might eliminate some of the stocks from that total list. Now, every stock in that list attracts different MTF margin. Some stocks might attract a margin of 25%, some might 30%. I would like to show you an example which will help you understand. I'm going to share my screen.
Sure.
Okay. So here you can see my screen, right? Can you see my screen, Yati?
Yeah, we can. Yeah.
Okay, great. Now here, these are the lists of the stocks in my watch list. So I'm going to start with Sundaram, right? Sundaram Fasteners is a stock. First, the moment I place buy tab, you can see there's an MTF tab here. When I go to the MTF tab and click in there, I see how many times. It's at 3 times, right? It means 33.33% is need to be financed by you or your margin requirement. So remaining 66.66% is going to be financed by the broker. Okay. So now again, for an example, if you can see here, if you want to buy 1 shares of Sundaram Fasteners, you have to pay 990 rupees 30 paisa. But if you want to buy under MTF, you just have to pay 330 rupees 7 paisa, right? Now, similarly, if I go to another example, say I go to Godrej Properties. Okay, I click here buy. And when I go to MTF tab, you will see how much? 3.7 times. Right? 3.7 times. So it means 27% I need to pay as a margin. So remaining 73% is going to be financed by the broker. Okay. So likewise, if you keep on going, you go to Bank of Maharashtra, just see, you will see there is no MTF facility here under this particular stock. Correct. So it means, right? So you will see all the different stocks with different margin requirement. I hope this point is clear.
Thank you, Neeraj. I think the example really made it lucid clear for us. Thanks, Neeraj. Thanks for explaining the margin part of margin trading facility. But I also do understand that when you're taking a loan, there has to be an interest, right? So how does that play out in MTF? What is the interest rate that a trader has to pay for availing this feature?
Absolutely, Yati. So as you know, when you take a housing loan, you have to pay interest to the bank that's financing it. Similarly, when you use MTF product, you have to pay an interest to the broker who is financing your purchase of the stock. Okay. Now, this interest rate could charge between 12 to 18%, even lesser than that. It all depends on the broker to broker. There are certain brokers, I won't like to take the name, who charges around 14% per annum. Now, in case of Paytm money, the charges 9.75% per annum. Now, again, this interest could based on slab to slab defined by the broker. Now, so as an investor or as a MTF user, this is a very crucial aspect of choosing this product, because ultimately your return on your investment could be adjusted or reduced by the interest that you pay, right? So that is what it's a very important factor. Now also you need to see to it that how much rupees that you are paying per day as an interest. So when they give the list of interest rate, they also give that how much rupees per day per lakh they're going to charge. So as you know, it's a very it depends vary from broker to broker how much interest they pay. You have to pay.
Got it. So Neeraj, we have talked about interest rates. But we understand that broker is benefiting because there are interest rates. But what is the benefit for the trader? How is MTF making their life better? Could you talk about that a little?
So when you talk about benefits of MTF product, we can categorize broadly into 4 different types of benefits. Okay. So number 1 is, of course, higher buying power, right? Without MTF, with 1 lakh rupees, you can buy only 1 lakh worth of shares. Right. But with MTF, with 1 lakh rupees, you can buy probably 3 lakhs or more than 3 lakhs worth of shares. So it gives you more buying power. That's a number 1 benefit. Number 2 benefit is flexibility to hold position. Okay. Right. Now, if you're a trader, for example, if you're an intraday trader, now you have to cut off your position, close your position before the end of the day, trading day, right? Now, in case of MTF, if you're buying the same position, if you're taking the same position with MTF, you are not forced to cut off your position before the end of the day, trading day, right? So that's the number 2 benefit. Number 3 benefit is no selling pressure. Now, as you know, as a trader, the psychology plays a very important role, the mental pressure. Now, because you have to cut off your position before the end of the day, and many a times it might lead to an closing the position at a rate which is not very favorable to you.
Right.
But with MTF, you were no kind of any pressure. Now, the 4th benefit is amplifying the profit. Now, because with MTF, you can buy 3 or more than 3 times quantity of shares. Now, the return that you generate is also amplified.
Right.
Now, take an example. For example, if you buy 1 lakh worth of shares without MTF, if you get a price movement of 5%, you will earn 5%. But with MTF, you will earn 15% if the MTF, 3 times leverage is provided under MTF. So you can amplify your return. So yes, these are broadly the benefits of using MTF product while you trade and invest.
Got it. So Neeraj, you talked about that, there is no selling pressure in MTF, and, you don't have to live in the pressure of selling at the end of the day. So, but how long can somebody hold the stock when they are using MTF? Is there no limit, or is there certain sort of number of days we can hold it for?
Yes, it's a kind of no limit. You can take your position in intraday trade as well, and you can hold it for unlimited period of time, say 2 years, 3 years. But you have to take into consideration changes, other changes. But technically speaking, you can hold it as long as you want to hold it, right? So this is how flexible the MTF product is.
But will my interest also not go up? How does the interest?
Yes, absolutely. You can hold it for 2 years, you can hold it for 3 years, and accordingly you'll have to pay the interest.
Right. Interesting. I'm also getting a lot of thoughts about the risk of, stock not doing well if I'm holding it for longer time. So let's jump into the section where you tell us what all risk does somebody take when they use MTF. Please walk us through that as well.
Yes. Now, there are certain risks also involved in MTF products. Now, see, when we talked about the benefits of MTF, we talked about amplified profit or amplified return.
Yeah.
Now, opposite to that is amplified losses. So, when the profit can be amplified, the loss can also be amplified, right? You can buy more quantity of shares. So, that's the risk number 1. Now, risk number 2 is, margin calls.
Okay.
Now, that's a very interesting one because, see, you bought a stock, you expect the price to go up. Now, what if the price starts going down very sharply due to factors which is not in our control? For example, Trump imposes tariff. We know that now currently 50% tariff is there. So, what if Trump imposes another 50%? So, irrespective of any technicalities, the market might go down.
Right.
So, in that case, the broker might, if you do not pay up the margin, the broker will ask for the margin, payment. And if you do not pay up margin, the broker might liquidate your position forcefully at a loss.
Okay.
So that's a risk number 2. Now, risk number 3 is an interest burden. Now, because you don't feel it upfront, you tend to keep on holding it for a longer period of time, probably. And that time you have to pay more interest to the broker. That's a risk number 3. Now, risk number 4 is volatility, market volatility. Now, we have seen that due to geopolitics or due to macroeconomic events, the market might suddenly turn volatile. And because of the volatility, and because it's a leveraged position, the psychological pressure on the trader or on the investor can shoot up. So that's again is a kind of a risk. Now, the next risk is, of course, the limited number of stocks. Now, we know that it's around 1,500. Of course, this list keep on changing. But there are thousands of stocks in the market. So all the stocks that you want to buy may not be included in the list of MTF. So that is again a kind of a risk, you can say. Now, emotional decisions, because again, there are two pressure on you. One is the price of the stock moving in your direction. That's the number one. Number two is that you are paying interest, right, on your holdings. Right. So you were pressurized by two factors all the time. So it might lead to a wrong decision making. That's also a kind of a risk that we can say. And finally, one risk that we all need to be aware of, that is what we call the regulator's risk or execution risk. Now, MTF, again, on the back end, lots of complex calculations are there. And as an investor or as a trader, he is not going to go through all the calculations. So if there is a mistake, on the part of the broker in calculating the interest component, the trader or investor might end up paying that. So I say this is also kind of a risk. Of course, the probability is very less, but this is also kind of a risk.
Thanks for explaining all the risks to us, Neeraj. Now that we have understood both the benefits and risks of MTF, could you also help us understand what kind of mindset a person should have when they are investing in MTF? Is there a certain kind of person who should be taking MTF and a certain kind of person who should not use MTF? Could you sort of talk about that a little?
Yeah, I think this is a very, very important question. Who should be using MTF? Now, first off is active traders. Now, when you say active traders who use technical and fundamental analysis, who have got a very clear-cut, decision-making mechanism. Now, when you talk about a trader, it means he has got a very sharp entry and exit points, right? He's very clear about his trading plan. What is the target for the stock? What is the probability of success for his trade? Or what is the probability of success of his investment decision? So yes, active traders who has got very good technical and fundamental skill and very clear-cut decision-making process. Number one, they should be using MTF. It's good for them. Second is disciplined investors. Now, when you talk about disciplined investors, who have got absolute proper risk management mechanism, right? Who can monitor the position objectively and take a call, right? It's not something kind of fire and forget. Many times when you talk about investors, you buy a good stock and you forget it for next 2-3 years. You see it after 6 months. But MTF is not such a product. You have to monitor it regularly. Okay? So you need to be very, very disciplined. Third is short-term to medium-term investors. Why I'm saying short-term to medium-term? Short-term, you can hold it for a few days, maybe few weeks. Medium-term, maybe few months. But ideally, it should not be for many years, 2-3 years. If you want to hold a stock for say 2 or 3 years, you should not be using MTF because interest burden could be very high. Now, you need to have very clear-cut price target, time horizon, how long you want to hold it, right? So these are the people who have got very clear-cut plan in their mind, trade plan or investment plan, entry and exit and a time horizon, very disciplined approach to trading and investing. For them, MTF is a great product.
Got it. Neeraj, so shifting gears here to sort of also think from the perspective of a trader, MTF is a leverage product, but it is not the only leverage product that is available to the trader. They can also get leverage on futures and options. So how does these two products compare? Could you help us understand that?
Yeah. About futures and options. Futures and options are derivatives product. Okay. There are call options, there are put options, there are futures. So when you say derivatives, these are derived product. You can have derivatives on indices, different indices, Nifty, Bank Nifty. You can have call option, put options. You can have options on different strikes, right? So it gives from a trading perspective, it's a very, very versatile product. But again, it does not give you ownership. Derivatives product do not give you ownership, but MTF does. Third is contract based, right? Contract based means there are 1 month contract, 2 months contract. So there's an expiry period. There are weekly contracts. So there's an expiry period that is involved with the futures and options. Now, in case of MTF, there is no expiry. There is no contract based. You can buy, in case of contract based, the quantity in a contract is defined, right? But in case of MTF, there is no quantity defined. There is no time frame defined. So it is not contract based. MTF is not contract based. Whereas futures and options are contract based. It has got quantity defined. It has got time frame defined.
Right.
Now, when you talk about futures and options, now although we have said that these are very versatile product, very dynamic product, you can have lots of permutations and combinations. You can create different kind of situations. But please try to understand that it is a very riskier product, right, than MTF, right? So that is one. And another factor is, in case of FNO, it's flexibility. Of course, it allows lots of flexibility. You can buy contract, you can sell contract, you can take a position for bear market as well. If you expect the market to go down, you can trade your view that the market is going to go down with the help of FNO.
Interesting.
Now, the last and not the least is intraday, right, and delivery. You can use FNO for intraday trading. You can use FNO for delivery based. You can use it FNO for hedging purpose. Hedge. It very well that when you expect the market to go down and you've got a portfolio, you can protect your potential losses by using FNO. That's what we call hedge. But with the MTF, it's not a hedging product, right?
As we come to the close of the session and we wrap the session, please give us some final tips for the viewers that are going to try MTF. Any do's and don'ts that you would like to share with them?
Absolutely, sure. We have talked about different aspects, different features, different benefits, and the risk involved. See, again, these are the points that you need to keep into mind while using MTF. Number one is a stop loss. Now, if you're a trader, you have to have very clear-cut stop loss. Even if you're an investor, you need to have very clear-cut stop loss in your mind. Now, second important is a monitor regularly. It's not something like fire and forget, right? Keep a watch on the movement of the prices and avoid over leveraging. Because you are getting 3 times or 4 times leverage, do not use your entire money to buy the stock. You need to keep a certain portion to pay for the margin call. Do not use the entire amount for MTF. That's very important. Now, second, take interest cost into consideration. Don't forget that you have taken your position or you have bought your stock based on MTF and you have to pay interest on it. Do not forget that. So take that factor into consideration while you take the decision. And finally, stay informed all the time. When there is a sudden change in market volatility due to corporate action, due to regulatory change, due to geopolitics or anything, you need to take your position very quickly. So that's how you have to. But again, at the end, I'd like to tell you that MTF is a fantastic product. If you are a professional trader or an investor, disciplined trader or disciplined investor, informed trader, informed investor, this product can make a difference, huge difference to your trading performance. So use wisely, use it intelligently. It is not a product that simply just go and use it intelligently. And I'm sure it's going to make a huge difference to your trading and investing performance.
Right. Thank you so much, Neeraj. Thank you for sharing all that wealth of knowledge with us and for your insights. And that brings us to the end of our session 1 of the special series on MTF. Today we talked about the fundamentals, the what and the why and the how of MTF. But what comes Next is also very important. We're going to talk about more advanced strategies of MTF. We'll talk about small term traders. We'll talk about how long term investors can use MTF. So please stay tuned and don't forget to subscribe to our channel. Thank you.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.